Today's webinar is delivered to you by ADS Securities London and A2Z Forex together, and it's a continuation of yesterday's market analysis. When we analyzed the market yesterday, there were many people commenting that it is very crazy for us to go and place a buy stop order at 1.0990 level on euro dollar, and many of you guys have been asking, how did we really do it? Well, the answer is pretty straightforward. We analyze the market by looking at true Fibonacci waves. And these true Fibonacci waves do tell us basically everything we need. So if we really look at that perspective, we can see that yesterday, the 1.0980 level was on 88% Fibonacci retracement zone. So if we go ahead and look at it carefully, 1.0980 level touched the overall 88% Fibonacci retracement zone. And the 1.0990 level, which was right over here, was just above the previous support level. So because we provided the pending orders right after the market, basically, it was, I believe, 1 o'clock server time. I'm talking about the pending written orders on A2Z Forex. So we saw that the market basically went down, penetrated the 1.0980 level, but based on the moving average convergence divergence, which is MACD, we also noticed that the market is moving not really on bearish direction. So that's why we took an kind of a pride to go ahead and basically place a trade order, pending trade order, just at this order, so that we could catch the correction wave. First target that we had was just to the level of the falling trend line over here, and the next target basically we are still looking for. It's up to you. Basically, you can keep your order or you can still exit the order, but we are looking for another candle to close above the trend line over here on hourly time frame, and from here we will be looking for another 80 pips or so upwards move, as the initial target will be 1.1095 or 1.1111 level. This is going to be our main target for euro dollar. Now let's move on to GBPUSD, as pretty much everyone is wondering what's next for this currency pair. I'm going to be once again looking at it from Fibonacci point of view to look maybe something we have done has been missed or so. So the first thing that we are looking at is the following level. We see the Fibonacci wave correct, basically 1, 2, 3. We can even make it over here if you want, but overall it wouldn't really be the best level that we can look for the fact that it's not really the perfect Fibonacci wave that we could look for. Or another wave that we could take, which would be also correct wave, would be the following. Again, however, it wouldn't be the perfect Fibonacci wave. So the one that we are really going to be looking for will be the week of December the 27th to the low of the week of January the 10th. So we combine those and we have the perfect Fibonacci wave. How can we say that it's perfect Fibonacci wave? If we go ahead and look at it on daily time frame, we just look for 61.8 and 38.2% levels to act as a support resistance levels. So we can see that 38.2% was a perfect support resistance, and therefore we believe that this is the level that we want to trade. Now, what is next for GBPUSD? That's the main question for us today. Since we saw the pair penetrating below the 1.40 psychological support level, and it has gone so far approximately 100 pips or so below that level, our target for now remains at 1.3825 level. And I'm again going to go place a pending buy limit order, and this time it's a strong one. And we will be placing buy limit order at 1.38 let's be more precise, and we can just make the level to tell us what's the exact level. So we will be placing our order at 1.3828 level, and that's going to be our pending buy limit order. So which means if you are still shorting GBPUSD, you can still keep on your short orders, and it's likely that you're going to be seeing your order to be triggered. So from here, what is next for us? Generally, a reversal from 161.8% through Fibonacci retracement zone sees the reversal to 61.8%. So if that level is achieved and we see a reversal, we are likely to see that at least initially the reversal will take place to 1.4180 level, and from there onwards to 1.45 level. So this is today's order as well, and you can keep on to it for the next 10 days even. Once it's triggered, you will at least get 50 pips out of the market in the very, very worst case. Now, let's look onto Aussie dollar to see what's really happening on this pair. So if we look at the Aussie dollar carefully, we previously said that for the last week, the level between 0.7120 and 0.7050, 60 levels is going to be a major support resistance level. So the pair obviously did reverse from that level, and we were looking for that trend line, the red one that you see, to confirm the resistance or possible break above. So far for today, we can see that the pair is already above that resistance line or trend line, and we are looking for possible entry levels. Is the market on bullish side? My answer would be no, for the fact that if you follow my analysis all the time, whenever you will see that whenever the market would be on or in between two moving averages, 50 and 200-day moving average, it's an indication that it's on a sideways movement. So for now, we still are expecting the market to be on sideways movement. And if we go on daily time frame, we can see that the sideways movement is going to be also confirmed on the hourly time frame as well. So what can we do in order to take advantage of it? That's the golden question, I believe. The first thing that you could consider would be look for a break above the 50-hour moving average, and then you can look for long opportunities. And your targets should be initially to 100% Fibonacci retracement zone, and that's basically 0.7255 level. And next target should be 0.7320 level, and that should be good for you to exit this pair for intraday. However, though, if you see a penetration above the 88% Fibonacci retracement zone, which is 0.7320, 0.7325 level, your targets could be prolonged to 0.7465 level, which is 61.8% Fibonacci retracement zone. One of you are asking, how do we make stop loss? You can basically go ahead and place 50 pips stop loss because GBPUSD is quite volatile these days. So place 50 pips stop loss on the pending buy limit order that we were talking about for GBPUSD. Now let's move on to the final two tradable instruments for today, and it's gonna be basically gold. If you remember yesterday we mentioned about gold that look for long opportunities. Every fall that you see should be an opportunity to long it. And we also had discussed to go ahead and place a buy stop orders and buy above the 1,222 level. So the level over here was our buy orders. So what we had yesterday was overall more or less 300 pips or so, or 300 points. There is not really pip on gold, and we have seen our first and second targets being hit, we were basically discussing of 1241 level and 1250 levels to be our resistance levels as a target. So we have seen these levels to be achieved, and once again we are looking for the market to be on the move. However, one thing is worth mentioning today, that we had yesterday on daily time frame a reversal candlestick formation. So what it tells us is that possibly we are likely to see a reversal from the market. So for today, I would avoid going long on gold and look for possible short opportunities. And short opportunities that I'm talking about will remain at the level of 1240 level and 1251 level, which you need to look for carefully. And finally, last but not least, we will be looking for crude oil, and we will be finalizing it for today. Crude oil basically reversed from once again $30.61 level, $30.61 level, and we had also the crossover of 50 moving averages going above the or below the 200 moving averages, which is a sign of bearishness. So stop longing crude oil, and once again start looking for short opportunities, and your target, as we discussed yesterday, still remains towards 30.30 level. This is it for today. Thank you very much for your time.